A lot of my clients who have purchased home in the recent past are now a little bit worried about the trigger rate. And this is something that we read and hear a lot about. So I want to clarify a few things about trigger rate and also introduce you to the concept of trigger point, which is more important than the trigger rate. Dan Bachir from Right at Home Realty. I'm your friendly neighborhood realtor and I'm your one-stop shop for all your real estate needs. So a lot of my clients who had, let's say for last year, interest rates around 2%, and now when the interest rates have increased in this short period, we're almost close to 5%. How is it going to impact them? So the first thing you need to understand is the interest rates are defined by your bank, and when you got your mortgage, you should have received a document that specifies at what point do you hit the trigger rate. The intention here by the banks is that when you pay back in your installments, you're paying a portion of interest and principal back to the bank. So when you took your mortgage, whatever the rate you had, they had kind of given you an installment option where you were paying the interest and the principal back. But with the interest rates going up so drastically, what has happened is the interest that you will pay back to the bank has gone up, which means if you were paying $1,000 as your installment and 500 of it went towards your interest and the other 500 to principal, with interest rates more than double, of course, that 500 has become 1,000 or even beyond that, which means you're not paying the interest that you owe the bank. And that's what the trigger rate defines. But if you're someone who has been paying mortgage back, right? Let's say if I took a mortgage of $800,000 for $1 million property at 80% value, and I have paid back $50,000 in last year on my principal, what happens is at this point, I have a credit of $50,000 with my bank, which the bank will consume if I'm not able to meet my interest payments. So your principal is not going back. Instead, you're kind of adding back to your mortgage, which is a good thing that the banks would do for you. And I'm not really sure if every bank does that, but most of the banks I've worked with, they do. And I want you to be aware of it and make sure, if in case you're hitting close to your loan to value, let's say if you borrowed the loan at 80%, and if you're going to exceed beyond 80%, that's when the trigger point hits you and the bank will come back and ask you to pay more. So what I advise my clients is to give me a call. Let's do the math. Let's see where exactly do we stand, because I don't want the banks to come back to you and tell you how much your payments will go up by, because that does not give you a choice. Instead, we play around with the numbers and come up with a good fit which helps your budget and also helps you avoid the trigger point. And this way we can ride this tide until the interest rates kind of come back down again, because they're not going to stay at this stage all the time. They're not going to stay at this high all the time. They have to come back, otherwise the economy is going to be in trouble. So for sure they're coming down. So we have to just ride this tide, be safe, and then we can kind of make our move when we are in a better situation to negotiate with the banks. Thank you for watching. Once again, this is Dan Bachir from Right at Home Realty. I am your friendly neighborhood realtor for all your real estate needs.